After a crazy week of jobs reports last week, which finally had some positive data for the Federal Reserve to consider, we saw a nice drop in mortgage rates. But have we seen the peak for mortgage rates in 2023? Also, for the first time in months, we actually saw an increase week over week of people applying for mortgages. How are these high rates impacting buyers? Will home prices ever come down? And what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar for your home, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We'll also be tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, I do a top 10 ranked list of the hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 5th. Let's see what the data is telling us this week. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly update. First up is market news. Good news from the jobs reports last week, at least as far as the Fed is concerned. We finally see evidence that the labor market is softening and the economy is heading into an area where the Fed will feel more comfortable. And I personally do not believe we're going to be seeing any more rate hikes from the Fed for the end of the year. But what do I know? Let's look at some of the major points from the jobs reports last week. First up, the pace of hiring continued to cool off in August with gains of only 187,000 new jobs, which is lower than both of the 204,000 monthly average over the last 6 months and the 2022 average of 399,000 jobs. So last year we had an average of almost 400,000 jobs a month. As of last month, we're down to only 187,000. Unemployment also saw a small increase for the first time up to 3.8%, and that's up from 3.5% back in July. This is still low historically, but it's the highest rate we've seen since February of 2022, so it shows we're trending in the right direction. Wage growth also slowed a bit on an annual basis. It's down to 4.3%, where previously it was 4.4%. So it's a tiny drop, but it's a drop. Job openings data is one of the Fed's favorite labor market indicators. The Fed wants to see job openings returning closer to a 7 million, so they've got to be happy that for the first time in a long time, it dropped this month below 9 million. So in summary, we have less new jobs being created, wage growth is slowing, even if it's just a little, and job openings are trending down. All of these are things the Fed has been trying to accomplish, which is good news for mortgage rates. And personally, why I don't think we're going to see another rate hike this year. Now, the last few weeks, we've been comparing the 10-year Treasury chart to mortgage rates, so let's do that now. So here's the chart we've been looking at. As you know, the 10-year Treasury and mortgage rates follow, at least when 10-year goes up, rates go up, 10-year goes down, rates go down. So it's not an exact science, but you can see when we were in this range, it basically correlated to about 6 to 7% rates. Not that long ago, we broke out of this range and we came all the way up here, which was our previous high back in October of last year. And at this point in time, I believe that was about a 7.34 rate. This time when we tested it, we got as high as a 7.49 rate. As you can see, we went a little higher. Immediately after, we rejected and came back down to here, which was historically the top of our 7% range. And rates got as low as, I believe, 7.06 last week. But as you can see, today we are shooting straight up. So rates are back in the 7.2 somethings today. We're going to check that in a minute. If I were a betting man and this were a stock, I would be shorting here and aiming for another test down here. That's what I believe is going to happen. We're going to get at least one more shot here. I have no idea what happens next. But this chart doesn't tell us anything about the future. It's just fun. And you know, if we ever rip over this 4.33 line, then we're going to be headed towards 8% rates, which I don't think is that likely at this point. Speaking of mortgage rates, you could see last week we started at a 7.29. We got all the way down to a 7.06. We ended at a 7.08, but today, as we saw on our 10-year chart with the line going straight up, we are up to a 7.21 so far today. So this makes 17 consecutive weeks being around or above 7% rates. That's more than a third of the year now. Now, regarding mortgage purchase applications, we actually saw a 2% increase this week, our first increase in a very long time. So total this year, this makes for 15 positive, 17 negative, and 1 neutral print so far this year regarding mortgage purchase applications. So buyers definitely took notice from rates going from 7.49 down to 7.06. And as we see by the increase this week, buyers are looking looking to take advantage of the lower rates. Now, if they didn't contract last week, we're already back to 7.21, but I think we'll get another shot around 7% soon. Okay, let's move on to our inventory and new listings charts. Let's start with our new listings, and this is a big deal because we had quite a scare last week with this big drop. If this had continued trending, even with rates this high where they are, I mean, we would have ended the year way below this 20K. So as you can see, historically, basically from here to the end of the year, we're gonna see less new listings coming on every week. And this is for the entire country. This is not specific to Dallas. There's nowhere that provides that data just for this area. But in general, from here till the end of the year, we should see less new listings. So having a jump this week was a huge help. So hopefully as the year goes on, we're gonna see these lines converge closer and closer, and hopefully we're gonna get a better start next year and build up some more inventory. But here's our national inventory chart as a line. Each one of these black dots is 1 year apart. As you can see, we needed a big run up like this so that our inventory would have ended somewhere up here. We would have had a healthier market. We didn't get it. We still have less homes on the market today than we did last year. And it's just a very slow climb of inventory. And in probably a month or two, it's gonna start curving down and we're gonna end up somewhere down here. We can see it reflected a little easier here. And this 2022 line, last year, the green line, we needed a big run up from March all the way until now. And instead we got almost nothing. So just reflecting again, we have less inventory than we did the previous year. We're probably gonna end up somewhere between these two. So we really need something to change to get some inventory to build up, and I don't know what it is. And I've been reiterating this every week, but what it means is if you're in the home for a market now and you don't like what's on the market now, don't expect to see much better options because, like I said, there will be less new listings every week, yet inventory could continue to go up still for a few weeks. So how does that work? How can new listings go down and inventory go up? It just means the houses that you already don't want are going to continue to sit on the market having price drops, and the great new homes that come on the market are still going to get bought up immediately. So do not think that if you wait until later, you're going to have better options. You're not going to have better options. You'll have less new options every single week from here till the end of the year. Now I'm going to quickly run through the MLS data, starting with Dallas County. We had 314 closed sales in the last 7 days. That's 10 more than last week. We had 456 homes listed in the last 7 days. That's 28 more than last week. 96 of those homes that closed were immediate sales, meaning they went under contract within the first week, and that's 12 less than the previous week. In total, there are 2,190 homes under contract or pending, and that's 49 less than the previous week. Now moving on to Collin County, we had 270 closed sales in the last week. That's 21 more than the previous week. We had 269 new listings. That's 89 less new listings than the previous week. 75 of the homes that closed were immediate sales, meaning they contracted within the first week. And there are 1,727 homes under contract. That's 73 less than last week. Okay, now let's move on to the housing data, starting with Dallas County. We spend less and less time on this every week because it moves slower and slower. So if you watch my videos, you know I use the market action index. It just takes all of this data, puts it into one easy to read graphic. Anything 30 or below is a buyer's market. Anything above that, we're just asking how much of a seller's market is it. We are at a 48 right now in Dallas County. And as you can see, we were up here at as high as a 56, and it's just been a slow grind as rates climb. It's just gotten cooler and cooler and cooler. Median list price, though, did not drop this week. It remained, well, it's $10 below where it was last week. So median list price did not take a hit this week for the first time in however long this is. I would say since July 14th, it's just been kind of a slow grind. Median days on market has remained flat around 35. Number of homes having price decreases. Again, don't let this fool you though, because what you're gonna see is homes, more and more of them are gonna have price drops, but it's the less desirable homes that already nobody wants. Those are gonna continue to sitting on the market through the end of the year, making it look like inventory is going up, but it's not going to help you as a buyer because it's the bad inventory. Remember, less and less new homes will come on the market every week. So don't think that because there's price decreases or even the inventory will continue to climb that it's actually going to be easier for you if you're just someone who's looking for a nice home to live in. Inventory as well has just barely been climbing. I mean, from 2,600 to 2,800, and that is since July 7th. That is not what we want to see, but people just don't want to list their houses unless they absolutely have to because they're not willing to lose their 2.5% rate to get into a 7.5% rate. Now moving on to Collin County, a little bit of a different picture. Collin County always gets hit a little bit harder because it has a lot of smaller and I would say less desirable cities included in it. It has more of those than Dallas does. So their market action index is down to a 47. Same story, it's just been a slow grind down, and actually this week it remained pretty much flat. Though median list price had another little drop. Let's see, well, about 6,000 or 7,000 was the drop. Median days on market remains around 35. Price decreases has been holding steady around 48, but their inventory has been way more flat than Dallas, and that is not a good sign if you're looking for a deal. Because just remember, the second that mortgage rates come down, buyers are going to flood into the market, and that number is going to go straight down. So we're really hoping while rates are high that this number was going to be climbing and climbing, and it just hasn't. So all of this to say, please don't wait to buy a house, because the second mortgage rates drop, it's going to be multiple offers on everything, and it's going to be impossible to buy a home. And just to give further context on that, in May of 2020, when all of this craziness started, there were over 6,100 homes on the market in Dallas County, and mortgage rates only went from about 3.75 to 2.75. It was only about a 1% drop. So if that same type of drop or something comparable that would bring that kind of demand into the market, we're starting with only about 3,900 homes on the market. So the supply shortage is already much worse if we see an increase in demand like that again. So you remember how crazy it was 2021, 22. It would be even crazier now if we saw any significant drop in mortgage rates by a long shot. And if you're thinking, well, we had a big supply constraint because COVID was happening, people didn't want to leave their house. Well, we have an equally big supply constraint right now in that mortgage rates are crazy high and nobody wants to sell to move to a home with a higher rate. So please don't wait to buy a home. If you can buy a home, buy one. You're not going to regret it. And if you're still on the fence about whether or not it's a good time to buy, please watch this video. Okay, now let's move on to my favorite part of the video. These are the top 10 ranked charts, top 10 hottest cities and zip codes in all of Dallas and Collin counties. Okay, starting over here, taking a look at the hottest cities, Carrollton remains in the #1 spot. Grapevine heats up 1. Louisville heats up 1. Coppell heats up 2. Richardson remains. Balch Springs cools off 4 spots, so a very short-lived heat wave for Balch Springs. It was up at #1 not too long ago. It was actually up at #2 last week. Garland heats up 1 spot. Irving heats up 2 spots. Mesquite jumps onto the list out of nowhere, and Grand Prairie also jumps onto the list out of nowhere. So a ton of movement on the hottest cities list, and this week 2 cities got knocked entirely off the list. That was Saxe, which went from #7 to off the list, and Lancaster went from #9 to off the list. Now we like to zoom in and see which specific zip codes are the hottest. The absolute hottest this week is Carrollton, 75007, followed by Garland, 75041, Mesquite, 75150, Carrollton, 75006, Richardson 75082, Richardson 75081, Carrollton 75010, Plano 75075, Louisville 75067, Grand Prairie 75052. Now we're moving on. We're going to do the exact same thing for the coolest cities and zip codes. The absolute coolest city in both of these counties is Leonard, Texas, and it actually popped back out. It was a buyer's market, if you'll remember. 30 or below is a buyer's market, and it was down there last week, so it's officially back in a seller's market just by a hair. Up next is Whitewright, which held its #9 spot. Ferris cooled off 2 spots. Sunnyvale heated up 1 spot. Blue Ridge heats up 1 spot. Salina, Van Alstyne, Rockwall, Farmersville, and Red Oak all remained in their spots this week. Now looking for the absolute coolest zip codes. Leonard, 75452, Whitewright, 75491, Ferris, 75125, Sunnyvale, 75182, Blue Ridge, 75424, Dallas, 75203, Rockwall, 75032, Dallas 75219, Salina 75009, and Dallas 75208. All right, guys, I'd love to hear your thoughts on what the market is going to look like moving forward. Are you waiting to buy a home? Why or why not? And remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that info is in the description below. Thanks for watching. I'll see you in the next video.